what was I doing wrong that they could see that was an opportunity? And that was one of the biggest epiphanies for me, is to go back and see what it was I was referring to, and how if I was to reverse it and say, okay, if I didn't look at it with that perspective in mind, okay, if I didn't look at it as, um, if I'm bullish, I'm buying it. That's all I was doing back in the 90s. I was afraid to short. I didn't understand it. So I was a perma bull. Okay. So if I took a long and I got stopped out, or if I didn't use a stop loss, because I did that a lot in the 90s, I was afraid to put it in the wrong place. So what was the safest way to trade then? In my mind, don't use a stop. And I ruined myself so many times doing that. You have to have a threshold at which this is where I'm wrong. I'm not going to trade anymore. This is where I have to pull the plug. But I would go back in my trades and start reverse engineering it from the other side. Like someone was a bear. And that was one of the biggest discoveries for me, to trust being a short or a bear, is to see when my own live trades were failing, when I was extremely bullish and I had my biggest positions on. I'm long 20 contracts of soybeans. I'm really in there. I'm really trying to do what is likely to be a big move, right? So if it craps out and I'm stopped out and it goes careening the other direction, I'm going in trying to figure out what it is that I did wrong. And if I was a bearish trader, what was I looking for that would be there? And one of the patterns that kept continuously forming is what I literally just gave you all on mentorship on YouTube. That pattern of waiting for a run higher, because I would chase breakouts. I didn't call myself a breakout artist, okay? Because breakout artists, they would literally just leave their stop order above the marketplace and let the market in. Not me. Back then, I was scared. I was scared. I wanted to see the market really running, really taking off, where a reasonable expectation would be to see the market go maybe 2 cents above an old high. If you're trading the grains, it's like $100 per contract. It's the same as like an e-mini. It's $50 per cent. But I would wait for it to move like 15 to 20 cents. Now, on that big candle up, I'd be chasing it and buying long there. Well, obviously, just static retracements would come back and start scaring me. And I would move my stop loss, if I had one, lower, opening up the risk even larger and larger, because in my mind, I had to be right, because it's been going up. It was really explosive to the upside, but I got wrecked. I got my hinder parts handed to me. And what I discovered was this pattern of going above an old high, then breaking down, and then that secondary rally up. At that time, if I hadn't been stopped out, or if I removed my stop and I weathered that retracement, I would feel like, okay, I dodged a bullet there. And then I would feel more confident, and I'd be in there praying to God, help me get this move past, this level here, keep going up, just let me get out of it. Even at that point, I didn't want to be a profitable trader in that trade. I just wanted to be able to survive it and the commission, which at that paying $100 per contract. Let me say it again. $100 every contract. Fox Investments. Okay. That's what I was paying as a beginning trader. Everybody was getting raped back then. It was ridiculous. Okay. You guys complain about what you have to pay for your commissions today. This is peanuts. Okay. It's nothing compared to what we were having to pay back in the 90s and before that. It was just, they called it full service brokerage. Full service. Yeah. They're servicing you, right? The hose without no lube. And I didn't know any better. I figured this is what you're supposed to do. It wasn't until later on I moved to Linda Waldock, where it was a little bit better in terms of the commissions. I think it was around like $30 round turn, which even by today's standards is still, but man, coming from $100 per contract to $30, it's a big savings. But back to the discussion about how this whole model evolved. During that return back to the fair value gap that I had no awareness of, I had no awareness of that fair value gap at all. Didn't even stand out in the chart. I had no idea what it was. Didn't see it. It was always in the charts, but I paid no attention to it because I didn't understand it. But as it went back up into that fair value gap, I'm thinking, okay, my long trade's going to be able to get me back to a point where I can just get out of it because I can't stand it. I'm completely mentally and physically and emotionally fatigued now. I don't have any stamina to be in the market anymore. Not long, not short, nothing. I just want to be out of it. Give me a number one, tweet to me number one right now if you've ever had that experience where you're in a trade and you're just absolutely exhausted. You just want to get back to even. You don't care about being profitable. You don't want to be a net loss on a trade, but I don't even care if it goes to the moon. Just let me get out of where I got in it. That is what these markets will do to you. That is the byproduct of a day like yesterday. You have to know what that feels like. And many of you are so new, absolutely so new, that you don't even know that that's available to you in terms of insight and experience that would protect you. It keeps you from learning how painful that you can blow your account. You don't need to blow your account, folks, to learn these lessons. That's why I'm mentoring you this way. If you go through these learning episodes and take yourself in the market and endure these moments like yesterday, that one day you can look back and say, well, I didn't make any money. This was a waste of my time. This is a joke. This guy can't trade. His fair value gap pattern didn't work. His model's broken. It's fake. It's flawed. It's illogical. He's only hindsight. He's this, he's that. That's what losing traders do. You immediately go to the toxic excuse as to why it's not working for you. When the whole concept and the point was, go into the marketplace, study, what is it doing? How is this going to benefit me? Or more importantly, how could I be harmed by this? Because if these environments repeat, they do. If you know what they look like going in, or once you get involved and you can identify what it is in terms of a market profile day where it's likely to consolidate and chop you up, how do you engage with that? How do you trade it? Well, I gave you insights yesterday on how to do that. Stop trading off until all throughout the afternoon, wait to that last hour trading. And look for a pattern that makes sense. That run on that buy stops and pull back to the middle of the range. You don't need it to take out the lows at 39 or 38.55 or what it was. You don't need that. If it pulls back to the middle of the range and you sold short the daily high, who's going to complain about that? I'm sure look around, you'll find somebody. But if you're in here trying to find setups that are consistent, even on consolidation days, you're going to find that those choppy days, if you go back and look at the last hour of trading, many times you're going to find that opportunity present itself. And sometimes it can go even further in the middle of the range. But it's better to take the bulk of your trade-off, as you watched me illustrate in my video last night. It's better to take the bulk of your trade-off in the middle because it could stay range-bound or, like it did with me, come back up and take my stop, which was only on one contract basis. And the majority of everything else was taken off in the middle of the range. And you watched me take the other one off. The remaining two, I took one off in the video of the recording. But back to the discussion of the model. So during my times when I was being a breakout trader chasing price, so I'm like Johnny come lately. Okay, I'm waiting for it to not only break out bullishly and run up 15, 20 pennies. Okay, that's $1,500. Oh, no, I'm sorry. It's 20 cents. That's $1,000. So $750 to $1,000 movement already higher. And then I'm going in and I'm buying it. That's what I was doing back then. Because in my mind, as a new trader, no experience whatsoever, completely greenhorn. I mean, I was the definition of absolutely clueless, but I'm in there with live money. Way too fast, no idea what I was doing. And I was chasing it because I was thinking, okay, Ken Roberts showed me in this book that these moves go like $20 moves, in the grains. You can do that. Or silver is going to go up to $50, an ounce. It's every day, every year he was promoting that. Buy silver, buy silver, buy silver. And that book really converted me into thinking that every trade I was going to get into was going to be these big blowout, huge run-up moves. So it was in my mind thinking, hey, I'm going to wait for it to break out. that initial breakout encourages me, but then I'm going to wait. I want to have further confirmation. And a lot of you actually probably have this experience too, where you can pretty much see likely to go, but you don't have the courage to actually go in when it's the best time to get in. You want to wait for it to start moving in that direction and give up a half or three quarters of the move. And then you start saying, okay, well, I can see it's going to go to that particular level right there. And then you go into the trade. And it might go for you a little piece. And those are the wins. They're the ones that you'll feel confident in showing your friends on social media or your coworkers. But you won't share the ones where it retraces against you, which is normal, but you get either stopped out or scared and you close the trade. And then it runs to your objective. And you go away thinking, oh, I'm never going to learn this. You're never going to learn it doing it that way. And just like I didn't learn how to trade profitably by doing what I was explaining earlier, waiting for anticipating the breakout, seeing it, and then watching it run even further, and then calling that confirmation. No, that's not confirmation. That is observation of someone else doing it right and me not having the understanding, the discipline, or the foresight to gauge it when I should have. But when it would go back up into that fair value gap on my long after it took out a high, I would be confident that I'm going to get to the point where I can get out of the trade and be break even. So what I was doing was teaching myself to be what? Late to the party and never making money. Think about that. Apply that same hardcore in the mirror analysis of yourself. Because I guarantee you, put a number 2, tweet to me number 2, if you've ever endured that or experienced it. And there's no shame in it. It's normal because these markets are well, in a lot of ways, it's a mirror. It's going to show you yourself. And that reflection isn't going to be appreciated by most of you because you think you look a certain way or are a certain type of person. And when you engage in these marketplaces and you put in your opinion or you associate your intellect to what these little patterns and candlesticks are likely to do next, and young men and women, they stake their whole existence and image on the fact that these candlesticks do something that relates to a profitable or positive outcome. Instead of just saying, okay, is this making me money? And how is it going to hurt me? And over time, when I was going back through all of my losing trades as a bull, because in the 90s, that's all I was doing, I discovered, because that pattern that Ken Roberts was teaching in his course, which was not really accurately described or titled, but the world's most powerful money manual and course. And it was neither powerful okay, or enabling for me for any profitability. I've never made money with anything the guy taught. But when I took everything that he talked about and John Murphy refers to in his book, Technical Analysis of the Financial Markets, I think that is a book that everybody should have, not because the stuff in it works, but because if you take that logic and turn it upside down, you have a 90% winning rate, okay, in back testing. Go back and look at all that kind of stuff. And that logic fails. It fails. Trend lines are wonderful when it's already happened. Everybody can do that kind of thing. But the hard walk forward for traders, not only under my mentorship, but in any endeavor in terms of trading, this is hard. Not because the concepts are, unavailable, because they have been obviously explained to you. What makes it hard is your personal personality, your character flaws. All of us have character flaws. I'm a perfectionist. I have to be perfect. Like I have to be perfect. And that's what I'm pursuing. Never going to get there. But my trades, the things I'm showing, I think they illustrate above average. I'm getting into lows and getting out above old highs, vice versa. Now, I'm not doing it all the time. I take losing trades. Logic is I want to go in and I try to teach my students where is the most logical entry point for a trade. And before that, I want to know where's it likely to go, and if that is likely to be the outcome or the terminus to where price is going to be drawn to, can I justify a trade in the opposing direction? Because if I can do that, then I still might take the trade, but I'm not going to trade with 4.5% leverage behind it, which would be like my competitive leverage gearing. I don't always trade with that, but I do it to showcase the difference between talkers out there that talk about what they do in market replay and day in reports that they can easily be, changed and audited and make adjustments and edit it. You can't do that with TradingView. There's nothing, you can't do any of that with TradingView. And you sure as hell aren't going to be able to do that when you're trading through a live broker and using TradingView as the portal. So that's why I'm teaching the way I teach. That's why I'm in this TradingView. That's why I show you the statements. That's why I show you the results. The bottom line is you can go out there and chase all kinds of wonderful illusions that a lot of people want to trick you into believing. And yes, I made millions of dollars selling my education. I don't do that right now. I'm not going to do it again. This is not a lead in. I'm not teaching you a little bit to get your mouth wet and then say, okay, now here's the pitch. I'm not selling anything. Nothing. It's been stressful. But I do enjoy teaching. But I want to teach you properly because there's a way to do this incorrectly. And it's everybody out there parroting what I say. They have no idea why I said what I said. They just repeat what I said. And that's why their students get frustrated because they can't get answers to the things that they heard me say, they then repeat because they don't understand why I said what I said. So when I do these long rants and discussions that are very boring to someone that just wants to get in, give me a stop and give me a target, I ain't got time for this. I got things to go on internet and talk about. Those individuals are never going to find longevity or consistency. And my students, my heart is in them succeeding. And I think if you pay attention to me long enough, you can hear that. Like, I am passionate about all of you. Like, I want you to succeed. What's it going to give me? There isn't going to be a mentorship for sale. It's just the enjoyment, the satisfaction of knowing that I poured myself into individuals on the internet that I'm never likely to meet. And you have done something to change your entire family tree. And that to me is amazing.